Today, we're gonna see how this turns into this. Welcome back for another episode of DD on the Go. We're starting off back in the state of Sonora, where we're visiting First Majestic's Santa Elena Mine. We're here to learn how minerals get mined and turned into those shiny bars that likely get stored in your grandpa's basement. Later in the episode, we'll go to First Majestic's mint in Las Vegas, where we'll get to see the refined product turned into bullion. First Majestic is, without a doubt, the most popular silver name in the stock market. They have over 80,000 shareholders, which is unheard of in mining. It's largely because silver is a story that resonates with retail investors.
It's hard not to fall in love with the story of what silver is doing. You know, it's a supply-demand issue. It's a simple story. We need a lot more silver than what we're producing, and we just can't get enough.
According to the Silver Institute, we are in the fourth year of a silver deficit, which is largely due to the increased demand for solar panels. But the recent price activity, from my view, has a lot to do with the recent rise in the price of gold. One of the metrics that is commonly used to evaluate the price of silver is the silver to gold ratio, which indicates that silver could have quite the run ahead of it, at least to get back to historic averages.
Should already be north of $50. They should be 7 to 1. So you pick your number on gold and divide it by 7, and that's your silver price, or at least in my view, that should be your silver price.
So in today's episode, we find ourselves back in Sonora, Mexico, in a town called Banamichi.
This is where the deep dive was born, in the rough streets of Banamichi,
which incredibly dates back to 1639. The lifeblood of the town is Santa Elena's mine district.
We have a lot of interaction with the mine, First Majestic, Santa Elena. We appreciate all the support they give to us. With this interaction, we can develop the school, the sports and culture in town.
The district, wholly owned by First Majestic, consists of 102,000 hectares of claims that comprises both the Santa Elena Mine, which was originally put into production by Silvercrest back in September 2010, and the Ermitaño Mine, which First Majestic discovered and placed into production in 2021. Santa Elena got its start as a small open pit operation before transitioning to underground 3 years later in 2014. In mid-2015, it was acquired by First Majestic for 154 million Canadian dollars in a friendly transaction that consisted mostly of stock. At the time of acquisition, Santa Elena was one of 6 producing assets for First Majestic. Just another name in the pot, if you will. In the years since, following substantial developments and enhancements, it has grown to become one of the premier assets of one of the only primary silver producers in the stock market. And in late 2024, Santa Elena saw the arrival of 2 ding-dongs who had the faintest idea of how a mine actually operates. That's us!
and we're off, folks, on our way to go see First Majestic's Santa Elena Mine.
Our journey to Santa Elena started like our very first episode of DD on the Go, with a visit to Hermosillo, the hub of the region. Except instead of the cool, palatable winter, we were arriving at the start of the summer in the desert. When stepping off the plane, it felt like we were stepping into an oven. After a night on the town where we saw Jay cry into his beer over the Edmonton Oilers' loss in Game 7 of the Stanley Cup playoffs, we loaded up in a van with some of First Majestic's crew at 5 a.m. to tackle the 2-hour drive to Banamichi. A quick stop at an authentic Mexican hotel to drop our bags off, and we found ourselves in the middle of a safety orientation, ahead of exploring all that Santa Elena has to offer.
So welcome. We hope you enjoy your visit here.
Now, on the surface, the process for mining seems relatively simple. First, you blow a wad of cash prospecting, exploring, and drilling a target until you find something that is economically feasible, which can be quite risky. And I think these risks are something that investors often overlook. Not to mention all the risks that come after discovery.
Even if you discover an economic ore body, you still have to permit it, you still have to build a mill, and from the time discovery occurs, often it could take at least 10 years to get that metal out of the ground, and that's a long time to wait, and it's a lot of money to invest in as well. You're talking about hundreds of millions of dollars of investment capital that needs to go into a new operation.
So after you find a project that's economically feasible, you go and get the infrastructure to actually pull the mineral out of the ground. Under current rules in Mexico, that basically means you go underground, blast out the material you need, scoop it into a truck, and then send it off to the mill.
Behind me is the ball mill, which is the first step of the grinding circuit. So after we've crushed the material, we've grinded it, we've fine grinded it, enter these leach tanks where reagents are added, and we see the process move further along. We are at the refinery where they are pouring doré bars. Sitting next to me here is about $2 million worth of minerals. These bricks are about 20 kilograms each. Oh, yeah! They contain approximately 90% silver, about 8% gold, 2% impurity. In value, in each of these bricks is probably about 130,000 US dollars.
But there's always a but, isn't there? There's so much more to mining in reality because the world doesn't operate in the black and white. As VP Corp Dev and Keith's right-hand man, Manny, told me, sometimes you gotta watch out for Mother Nature, which can make the business a lot more challenging.
Gold and silver, doré bars. So it's managing these risks, but mining is risky, whether it's silver price volatility, whether it's foreign exchange fluctuations, whether it's Mother Nature, taking a turn. You just got to be nimble, you got to be on top of things, and that's what we've learned. That's the business model that we've put in place, and it's worked, and we just got to roll with the punches, be agile. That's not going to change anytime soon.
To start, there's the investors that you have to keep satisfied. In mining, this means that continuous exploration needs to occur in an effort to replenish reserves every year, meaning that whatever you take out of the ground, you hope to find additional mineral to replace it with. For First Majestic and their Santa Elena district, this meant a drill program with 58,000 meters and multiple drill rigs in 2024 to try to find further mineralization. This strategy has worked for them in the past. It's what led to the discovery of Ermitaño back in 2016 and the recently announced Navidad gold and silver discovery, which is near to Ermitaño.
Then there's the economics of the mine. Now, there are certain things that can be done on site to improve economics, such as managing an appropriately sized workforce, reducing downtime, or implementing an LNG generation station like First Majestic in an effort to bring down the cost of power. But still, if you do everything right, you need the price of the commodity you're mining to stay strong. Something silver investors have seen over the years is constant evidence of suppression by banks and traders. It's believed that the paper markets heavily distort price discovery in the physical markets. Well, Keith decided to take matters into his own hands by opening a mint in Las Vegas.
As a company started selling silver directly to the retail investor back in 2008, we started to witness that there was a real bottleneck in the mints. We would send them silver and they would sit on our metal for months, and it got to a point where I just said, hey, look, enough is enough. And about 2 years ago, we started putting the early idea together to open up our first mint, and about a year ago, we finally started construction after putting some people in place and figuring it out.
Now, I don't know what I expected when I thought of a mint. Perhaps a boiling, dusty facility with hot, molten metal being poured into what would become shiny silver bars. But this wasn't it. Instead, the facility was an unassuming building in a location no one would suspect the mint to be. We didn't film it for obvious security reasons, but let me say this. An operation like this could easily be in any building across the country. Anyways, the building was spotless. There wasn't a speck of dust to be seen. And the process of turning big hunks of silver into bullion coins was rather, boring. The process is relatively simple. You take a massive silver bar that has been refined from doré into a pure chunk of silver. You then put it into a machine that heats the bar up until it starts to melt. That hot metal drips into a tank with water, turning a 1,000-ounce bar into a pile of silver shavings. Those shavings are weighed and put into a graphite mold for your 1, 2, 5, or whatever ounce bar or coin, which then goes into a conveyor and melts the shavings into a pretty shape. That coin or bar then gets either stamped or etched with the logo or design of choice. We're told that First Majestic can soon do designs on demand with a special laser etch machine. It then goes through a deburring process to make it real nice. Then it goes into the vault. From there, it gets shipped out to whatever silver investor decides they want to stack some silver. The key to it, however, is the entire supply chain aspect. Most mints operate on small margins. They buy the silver from the refinery, process it, and sell it for a slightly higher price than spot, with the spread referred to by physical silver buyers as the premium. But when you're the one mining it, it's a little bit different. Suddenly, you can sell at a premium to spot, but the margin is really much higher, based on your all-in sustaining costs back at the mine.
We're able to charge $3 to $5 above spot, so we're able to charge $35 to $37 an ounce for the same silver that's coming out of Mexico, where the mines are producing it from. And now we're refining it and we're minting it, and we're able to capture more margin to the bottom line. Goal for this year is to increase sales quite a bit compared to the previous years. But the long-term vision really with the mint is we want to get 100% of our silver through this facility, capturing more margin. That's really the whole intent with the first mint.
Es la Simba, ¿sí?
Our goal ultimately is to get 100% of our silver that comes from our mines in Mexico through this mint.
Now, there's one other aspect of operating a mine that we haven't discussed yet: the jobs and the impact on communities. Something that the mining community should do a better job of articulating to the general public.
The mining industry is perceived as, unfortunately, a dirty industry. I don't believe that. I don't think it's a dirty industry at all. I think it's one of the most important industries there is in the world. Without mining, none of this could happen.
This boils down to a social license, which is frequently referred to as a three-letter acronym people love to hate: ESG. You can hate on this aspect if you want, but if there's one thing that can make or break a project, it's the social license. I don't care if you've got grades of pure gold and silver, economics of 95% gross margins, or the largest deposit known to man. If you don't have the social license to mine it, you ain't gonna mine it. Take, for example, Rio Tinto in Serbia, where the country this summer had massive protests to veto a lithium mine. Or Fission Uranium in Saskatchewan, who failed to engage locals and saw the local Metis Nation tell them to kick rocks when it came time to get development permits. To First Majestic's credit, this is one area they don't take lightly.
Here, First Majestic has a project for reclamation and conservation of the land to put it in its previous state.
But it's not all about just returning the land to the way it once was. On site, First Majestic has taken on initiatives that serve multiple purposes, one of which is the ESG angle.
Here we are at First Majestic's LNG facility. They built this for two main reasons. One, it's a lot better on the environment, but secondly, it reduces their energy costs.
In addition to the newly commissioned LNG facility, the company has also spent big on a filter press, which removes excess water from tailings to create dry stack tailings.
The benefit of dry stack tailings is threefold. One is it's more environmentally friendly, less chance of any leachate happening from a dry stack tailings facility. Secondly, it is more cost efficient, more water efficient, because a majority of the water is removed from the tailings and can be reused in mine processes. And third, it is more stable.
First Majestic's efforts from a social license standpoint also extend off-site as well. Remember how we said the company was the lifeblood of the region? Well, that wasn't an exaggeration. The company supports the local community in multiple ways to make lives better. On the small scale, the company has contributed to irrigation projects to support local farmers looking to increase their production. On a larger scale, First Majestic has spent big dollars to improve the community under a multi-stage project. The first stage of that project saw the construction of a soccer field with artificial turf, stadium lighting, and bleachers. The second stage, which we're told is soon to get underway, will include the construction of an adjacent community center to benefit the entire town of Banamichi. And this doesn't include the indirect benefits to the town in the form of local employment for service providers, the sporting events hosted by the community, or the taxes the company contributes to the local government. I'm really grateful First Majestic opened their curtains to us. We learned so much that you can't learn from reading a news release or looking at a website or reading an investor deck. First, what First Majestic does for the local community and the people in the region often gets ignored by political commentators, economists, and generalists when they speak negatively about mining. When a mine enters production, it creates thousands of jobs. That means food on the table, education, and economic progress for communities that need it really badly. Another aspect I found fascinating is the sheer difficulty of successful mining production. Constructing underground ramps to access ore is a monumental task, almost like building a subway system in a remote area. And if the company fails to achieve the expected grade, it can have a drastic impact on the company's financial future. Seeing it up close, it becomes clear why investors are often wary of single asset producers. And also why First Majestic recently expanded their portfolio with the acquisition of Gato Silver.
Well, we're always making offers. That doesn't end. Whether offers actually translate into successful acquisition, that's another thing altogether. Not being a geologist or an engineer, I built this portfolio by, doing M&A. And you go back to the earliest days, our first mine was bought in 2004, and we were in production by October 2004. And I remember in 2004, we produced 25,000 ounces of silver, compared to, 21, 22 million ounces of silver today. So, quite a different production profile.
Of course, investing in First Majestic is a bet on the broader silver story. Regardless of how well the management team executes, the company can't fight the tape. During the last silver rally a few years ago, First Majestic was the most talked about stock on social media, which makes sense for a company with over 80,000 shareholders. Back then, the stock surged from lows of around $8 to highs of around $23, as silver prices climbed from the $17 range to the $29 range. This time, silver has climbed even higher, trading at $32 at the time of recording. Yet the stock hasn't caught the general investor's attention, at least not yet. Meanwhile, things couldn't be getting more bullish for silver. The shiny metal is in its fourth year of a deficit, largely due to its use in technology like solar panels, a trend that's not going to reverse. In fact, Samsung just announced a 600-mile solid-state battery that charges in just 9 minutes. And guess what metal it relies on? Silver. Meanwhile, there aren't enough mines being discovered to meet the shortfall. Overall, my bet is that as silver continues to gain momentum, the stock with the loudest shareholder base and the most liquidity will attract the most capital. And it's hard not to see that scenario working out extremely favorably for First Majestic.